Hey guys, Britt here. Welcome to End Times Bible Prophecy. Make sure to hit the subscribe, like, and share buttons. Today we're going to talk about why central bank digital currency is coming, what's going to cause it. And I firmly believe that that thing that will cause it will be the next great financial crisis. And we've been talking about why I believe 2023 is the year for that crisis. We're going to have possibly a global depression and a major financial crisis, meaning some sort of important institutions will have bankruptcy and other problems that are going to have to be resolved and unraveled. So in talking about that and in thinking about that, because that's what we've been talking about most of this year, I ran across on social media some clips of a November FDIC meeting. Some of you might have seen this. And I hesitated to put any of these out. I ran across these a couple of weeks ago, probably, because sometimes when you take these clips, they can be taken out of context. And the meeting was well over 3 hours, I think about 3.5 hours. So I want to make sure I watched that entire meeting and went through multiple parts over and over to make sure I'm giving you the correct information in context and not just a little soundbite that might be good for clickbait, might scare people. That's not what we're in the business of here. We're in the business of truth and talking about what may happen. So I'm going to show you some clips of this FDIC meeting, and we're going to talk about what some of this means. I think they'll really give us insight into how the next financial crisis is going to be dealt with. But more importantly, so in the process of going through this 3.5 hour meeting and listening to it over and over again, yes, I found some of these clips are taken out of context. Some of them, the statements, there's nothing nefarious there, but you think, did that person really say that? And they did, and we'll watch those. But I found some clips in there that I believe most people have completely overlooked that points to exactly why we're going to end up with central bank digital currency on the other side of the next financial crisis. So we're going to look at that. But first, let me just pull this up right here. So this is some clips from this FDIC meeting on resolution of a crisis. Right? So they're basically sitting in this meeting, they're wargaming, and various people in different agencies, different stakeholders, and trying to figure out how do we handle the next 2008-2009 financial crisis. That's what they're trying to figure out. And some of the context of putting these meetings out there, some of the social media I've seen means say that this is going to happen next week. No, they even say during the course of this, we don't know when the next crisis is going to come. The people in this room may not even be here, so we need to prepare for the successors of the people in this room. When the next crisis comes, there may not be anybody in the room who was there in 08-09, and they may not know how to deal with any of this. So this isn't indicating that they feel a financial crisis is about to happen, which I've seen pushed in some of the social media channels. Nevertheless, like I said, it gives us great insight into how they or their future counterparts would want to handle this crisis. And since I think this crisis is coming this year, that's my personal belief, these people in the room are probably the ones that are going to be really carrying this out. So when we watch these clips, yes, we'll look at them in context and we'll talk about the context, but keep in mind, this is how they're saying they would handle that financial crisis if it were going to occur this year. So I want to play this first clip right here where they talk about transparency. So I'm going to try to mute my mic so there's no feedback. Hopefully this plays well for you.
Hi. As Betsy conveyed, we've done a lot about transparency in terms of resolution planning. It's all out there on the website. What we want to think about and what we're starting to work on now is how to improve transparency about our execution plans for Title II resolution. We've been working on these for 10 years now, and we should probably be starting to say more things publicly. So what do we want to think about today is what should we be transparent about now that would help improve confidence in the event that we're called to use our Title II authorities. And we've been thinking about this across, many dimensions. First, we look at who we need to be transparent for. And we have a large number of lists on this slide that you can see. We've done a lot of work with policymakers and regulators around the world, it's been said, and a lot of engagement with certain parts of the firm. So the slides on the right, we've probably done more on, but what do we need to be thinking about for the stakeholders, the general public, customers, counterparties, other people like that? We think about what message do these stakeholders need to hear, and it might not all be the same. And then we think about when we need to be transparent. And I know that there's going to be a temptation for people to say, FDIC should just lay it all out there. Say what you're going to do every step along the way, and that pre-commitment will help improve confidence. But we also need to be mindful of the need for FDIC to have operational flexibility to adjust to the specific facts and circumstances on the ground.
So guys, here they're telling us about transparency. Now, Title II, that is a reference to the Dodd-Frank Act. So this is all United States based for those of you that are outside of the United States. But the Dodd-Frank Act was passed following the 2008-2009 crisis to try to avoid taxpayer bailouts of these failed financial institutions in the future. So here they're talking about that. So while this is an FDIC meeting, this does not mean that your FDIC insurance limits, if you're under those, that there's anything to be alarmed about, which is, again, what I see put out in some of the social media. And I can't see anywhere where that's not the case. But I think what this tells us about, find it interesting, she says, we have to figure out when to be transparent and who to be transparent to. Well, if you're truly transparent, you don't have to figure out when you need to be and who you need to be to. You just are. So it's, if you don't want to be transparent, that's fine, but don't tell us you're being transparent when you're not. I notice she also talks about, we've really been transparent with the people here on this side, the regulators, the banks, but, their customers and the media, the public, not so much. So there are to be possibly two different messages given to different stakeholders. So just keep that in mind as the next financial crisis unravels. But again, this is a clip I've seen out there go around, and I think with it, they're trying to sort of maybe fearmonger a little bit on this. While I don't necessarily agree with the idea of transparency that's not transparent, I don't think that necessarily means that you need to be alarmed or fearful of deposits and bank accounts. And again, as Christians, we shouldn't be fearful anyway. But next, I want to turn to this next clip because this goes on, and this will give us some insight into the next crisis and what we should expect.
And so, there are a lot of things we've been thinking about, and what we want to hear from you today is what you think the priorities would be in order to go about setting expectations appropriately in public about how we would execute Title II, so that if and when we do have to have that announcement on Friday night, ideally Friday night, that people are in a position to receive it, understand it, and say, yeah, that works. And we can see how this will happen. Of course, there will be doubters, but there's a lot of things going on. So with that.
So keep in mind, here she's saying that if there is one of these large failures, where they have to enact the Title II, and again, this is different from a bankruptcy where FDIC typically comes in for to depositors. This is more on they're talking about like a Lehman Brothers type moment, and unsecured creditors who have money above the FDIC limits, who have debt with the banks. We're going to make this announcement on a Friday night. That's what they do. That's what the government tends to do because people aren't paying attention then. The media cycle is over until Monday, so they can implement this. It gives them the weekend with that institution closed to try to sort these things out. This is all typical stuff that we've known in the past, but this goes on. Let's listen to some more.
First of all, I'd like to praise the FDIC for its unrelenting pressures to have more disclosure under the actual public reports. I think they have been very helpful. Second, I guess I am a bit pessimistic about your ability to communicate with the people who really need to know in terms of a crisis. And this is partly from my experience of teaching this stuff. There was a lot of interest just after the crisis. It's dwindled over time. And so people are sort of less and less interested in getting into the nitty-gritty and some of the really interesting developments. So I would think your strategy ought to be to disclose as much as possible to people who professionally need to know about it. And that would certainly include the ratings agencies and the people within the banks who are responsible for these judgments. And simply have publicly available a place where people can go if they need to know more. Because we're dealing with a society where people are getting their information in tweets. There's just no patience, I think, for going through the elaborate and careful planning that has gone on. It should be there. It should be accessible when people need to know. But I don't think you have much hope of reaching a public that doesn't have a professional need to know.
Okay, so what's he saying here? He's saying again, similar to we should be transparent, but let's stick this transparency in some far corner website because we don't want to scare the people who don't know, who aren't in the know, but people who have a professional need to know, they get to know, but the public at large not. And I somewhat understand what he's saying. He's correct. We live in this Twitter-type world where people want snippets of information, and what have I been talking about? Taking those snippets out of context, and the next guy that speaks definitely plays right into that by making some statements that, if you look at them on their own, you would think this is outrageous, and some of them, one of them, I believe, is, there's nothing criminally liable about the statement that he makes, but it just blows my mind to hear this statement made in a public forum in this way. But he's saying basically if you have a professional need to know within these inner workings, we're going to tell you, but we don't want to scare the public in regard to how severe the crisis is going to be. And again, just because this is an FDIC meeting doesn't mean people should be afraid of deposits they have in the bank unless you are above those FDIC limits. So again, that's exactly what he's talking about here. So I think this is taken in proper context. But when he says we live in a Twitter world, this guy sort of just walks right into that in this next clip, as you'll see right here.
I completely agree with that. I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? Like, my insurance company doesn't tell me what they're doing with my assets. They just assume they're going to pay my claim, right? I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do, that we want them to have full faith and confidence in the banking system. They know the FDIC insurance is there. They know it works. They put their money in. They're going to get their money out. So there's a select crowd of people that are in the institutional side. And if they want to understand this, they're going to find a way to understand this. There's a bunch of law firms represented in this room. There's a bunch of people that charge them by the hour a lot of money to explain this all to them. And it's fine. I don't have a problem with that. And they all have huge staffs. But I would be careful about the unintended consequences of starting to blast too much of this out in the general public.
So can I?
So the unintended consequences of doing basically what he just did, as the guy before him talked about, a tweet-based world where people can take that clip that he just said, and if you look at that alone, you'd think, oh my goodness. I mean, to make the statement that the public has a lot more faith in the banking institutions than the people in this room who are supposedly experts on financial institutions. I mean, how do you expect that to be taken? So, but I think what he is saying here, and I'm not defending any of this by any means, but what he's saying is the people who have something to worry about when it comes to the failure of this are people who have staffs of lawyers in the room who understand this process, what's going on, what it means for them, and could therefore take appropriate action to shield themselves against that risk of losing deposits, losing debt, that money they had lent to whatever institution is having a problem. I don't think what he's trying to convey here is that depositors at large are in danger. But again, as the guy before him spoke, that's how his words can be taken out of context when you take this little clip like this and put it up. And when you speak that way about, oh, the people, we don't want to scare the people because they just don't understand. They think, you give your money to the insurance company and you just expect to be paid when there's a claim. Well, yeah, people do. And so he's saying, we don't have the faith in the financial system that they do. And of course, we want them to have that faith, even though we don't have it. I can't defend that. I don't understand why he would make a statement like that in a public forum and not expect that people are going to clip that out and put it all over social media. But again, guys, I went through this meeting. Again, this is wargaming for some future scenarios. But I think what is key that I drew out of this was I'm watching these clips, and as I'm watching, this light bulb goes off that says, this is why central bank digital currency will be rolled out in full following the next financial crisis because of the clips we're about to watch. Those are much more important than these other ones we watched. Again, those can be taken out of context, or you can choose to believe whatever you want to believe about those clips. That's fine. But I believe the most important clips we could take from this meeting are these next two that we're going to look at here. So let me try to pull this one up right here, and we'll take a listen to this, and then we'll talk about it.
I'll also add, a couple of other points of concern for me. One is obviously the undesignated non-bank systemically important financial institutions. The Financial Stability Oversight Council has not designated any in quite some time. And I think many experts agree they exist, and we do not have resolution plans for them. That would make resolution very challenging and create an enormous amount of complexity. And of course,
so what is he talking about here? Well, you may have heard reference to GSIBs. GSIBs are global systemically important banks. So your JP Morgan, your Goldman Sachs, if they fail, it causes a ripple effect throughout the entire world. And there's, I think, like 27 of those said banks. But what he's talking about here is there are systemically important non-banks. So, and they don't have insight into those. They know they exist, but they aren't within the regulatory purview of the government, right? So you have hedge funds, you have family offices, which are these wealth management mechanisms for wealthy families. You have non-banks that are outside of the regulatory window. In this next clip, they're going to be talking about that, and then, hey, a radical solution to maybe get insight into that. So let's watch what they say next about they know these exist and they pose a threat to the system because of the complexities in resolving that failure that could have a domino contagion effect within the financial system, which is exactly what we've been talking about for months now. So let's watch this, and see what we hear.
To amplify those comments as well, I think you have two things here to add. Big picture, how do we horizon scan in a more effective way? And how do we contemplate an economy that is substantially more open, right? You don't have the banking industry writ large as a choke point for the bulk of financial services delivery anymore. You've got open technology architecture, you've got open non-banks, you mentioned that a little bit. So as you think about continuing to shore up this section, which is super important, it's sort of like a balloon. And the answer may or may not be, regulate more, expand powers. But how can we think about under the powers that you all have in collaboration with the other agencies to identify and address these types of risks as they emerge? Because in the end, people are going to care about was the economy impacted by financial instability, regardless of where it came from.
So again, what she's saying here is there are institutions. Essentially what she's saying is, hey, following the Great Depression, these regulatory bodies were set up. We have insight into the banks and the possible threat that banks pose to the global economy. But our regulatory reach is only so far. We don't necessarily know where the next threat lies because we don't have insight into these non-bank financial institutions. And then the key there at the end, she says, in the event of a crisis, so in the event of the next financial crisis, what people are going to care about is where did that threat come from? So when people lose their jobs, when people have financial turmoil in their lives because of the next crisis, they're going to say, where did this come from and why was a stop not put to it? And what their belief is, and what my belief is that threat very well likely could come from a non-bank institution that's off the radar right now, that fails, causes other institutions to fail, and it causes this ripple effect, a contagion, that domino effect throughout the economy. So let's listen on and see what they say next, because guys, this is super important. I think in the end, we're going to tie all this together, and it's going to show you where this leads.
You had mentioned right in your introductory remarks that the last time we met, you did not have the data which you needed for non-bank financial institutions. This is what the chairman generally mentioned about non-bank financial institutions. At the beginning, I gather you still don't have it. I've got to believe that this creates a problem not only for you have no ability with the non-banks, but I would think adversely affects your ability to really supervise and plan for the regulated sector. So if all of that is still correct, and to go to what Jay said, we've got a gaping hole and the non-bank sector grows. Now I want to take a radical approach, a suggestion, and go back to something the director mentioned again in his opening remarks, and that is FSOC. There are huge problems with designating and regulating non-bank institutions under FSOC. But why could not FSOC designate just for the purpose of providing data, requiring data to come to you to give you a better overview of what's going on?
So what's he saying here? What is FSOC? So FSOC is Financial Stability Oversight Council. Again, that was set up as part of Dodd-Frank. So they're trying to prevent the type of events that happened in 08-09 coming by seeing them coming ahead of time and heading them off at the pass. But what he's saying here is they do not have data into non-bank financial institutions, and that poses a problem. So he'd like here's a radical idea. Maybe there's some way that FSOC could get insight into that data. Wouldn't that be great? So it continues on. Let's listen one more clip, and then we'll tie it all up.
I think these guys are going to find that question over their head. But I think you raise an important question, Rajan, I think this is a subject, obviously, I think all three of us are concerned with as members of the FSOC. I think it's been a focus of attention, if I may say, for the Secretary as well. And it's a subject we're hoping to address.
So, of course, also the tools to get firm-specific data, to the extent there is I don't think this will be that helpful, but some state regulators that have some insight. But there's also the Office of Financial Research, which has certain authorities to compel and collect data that has been used in a fairly limited fashion. But it's also important to underscore the legal mechanics of invoking Title II for a non-bank requires, I believe, supermajorities of the Fed board, the FDIC board, and sometimes maybe even the SEC has to be involved, consent of the Treasury Secretary, maybe even consultation with the president, and with no real insight as to what is happening other than market signals. And to be able to go in again without a supervisory relationship, without a plan. And yeah, tough. But I don't know what Jim.
So here we go. This is, I believe, the key to why this is an important meeting to watch. So here he's talking about they don't have the tools for these non-bank financial institutions to get the data, and the legal mechanics of doing that would require, everybody in government coming together and agreeing to this. Basically, he's saying it isn't going to happen. There's no way. In a nutshell, he's basically saying there's no way for us to get that data. So why does this matter? Because here, I believe, is what's going to happen. I believe we're going to see another financial crisis at some point. I believe it's this year. I don't know for sure when it's going to be, but I believe this year we're going to see a depression with a financial crisis in it, meaning a systemic failure of one or more major institutions. And when that unravels, people are going to lose their jobs. There's going to be a lot of financial turmoil. I mean, you know what the Great Depression was like. You know what the 2008, 2009 financial crisis was like. That was unbearable for a lot of people. And this is going to be worse than 08, 09. And so people are going to be demanding this cannot happen again. What caused this? And ultimately what they're going to come back on, whether it's, I believe it may well be caused, the system itself is unsustainable, I believe. But what is that, match that lights the fuse, so to speak? I believe it very well could be Japan, a default on government bonds. So it could be a government failure rather than one of these non-financial institutions or financial institutions they're talking about. We don't know. Nobody knows where it's going to come from. But ultimately, even if it is a government like Japan that fails and defaults on its debt or hyperinflates its currency, the problem will be they'll point to some hedge fund or family office, some non-bank institution that went out and basically committed fraud probably and took some assets and went out and got a loan based on those assets from one bank, went out to another bank, got loans based on those assets using the same assets as collateral, then took a leveraged position that went wrong and lost it all and blew a big hole in the balance sheets of those banks that had lent money to it. And they'll look back and they'll say, we could have prevented this if we had had the data and the insight into what that non-bank financial institution was doing. If we had had insight into their financials, we would have known that they pledged that same collateral to two different banks and they were committing fraud, and it would have never happened. And then therefore, this will be the reasoning, this will be what the politicians say, therefore the crisis never would have happened. Which I would say is probably quite a stretch because it's the system that's unsustainable, but this will be a symptom of that system failure is things like this type of fraud. We've seen it with FTX and the failure there. We saw it in 0809 with Bernie Madoff. We're going to see fraud that leads to some sort of contagion. We saw it with the lending practices, some of those that went on back in 0809. So what they're going to say is if we had insight into the data, we could prevent it, right? And what would give them insight into the data? Central bank digital currency. If central bank digital currency is the means of transacting, if that's the new currency, then they would have insight into every penny on the financials of every bank and non-bank and private entity in the world using that central bank digital currency. And that would give them the insight they say they need to prevent another crisis like this. And so that's how the politicians are going to sell it. Oh, I know this was a terrible crisis that we all had to go through. We can prevent it by rolling this out. And this will give us insight into those irresponsible people, the fraudsters, the people that caused all of this will not be able to do this again if we have this, because we'll have visibility into what they're doing. Oh, and by the way, while we're at it, go claim your $10,000 that's sitting in your e-wallet or your $20,000. We've been over that before. So there's going to be the incentive. That's the sales pitch that's going to come to the world, is we can prevent the next financial crisis. Oh, and here's some free cash for you to help you get started following this financial crisis or in the midst of this financial crisis. And that's how they're going to roll it up. That's why they're going to pitch it. That's why they're going to sell it. I am convinced of it that whenever this next financial crisis is, we're going to see central bank digital currencies roll out very soon thereafter. It'll be what they've been waiting for to do this. So, guys, again, I hope this video shows the importance of not taking small clips and running with them without understanding the context. And again, some of these clips, even in the context, they're unforgivable. I mean, saying, well, the public has more faith in financial institutions than the people in this room. That's unforgivable. I can't defend that. Why would you say that and then turn around and say, but we want them to continue to have that faith that we ourselves don't have? That's, lying. There's no other way to put it other than that. But while the focus in a lot of social media has been on those few clips, I think these last ones that we looked at, while seemingly mundane, are far more important because they show us how we're going to end up with the central bank digital currency. Because, guys, central bank digital currency is coming. They've told us that. And I believe the financial crisis is coming as well. And we just went over how that could play out, what would happen afterward. So the key is, what can we do about it? We're going to talk about that tomorrow some, because I've been getting lots of questions, lots of emails, comments on the videos from people saying, what do I do? What do I do? And we're going to go over what the Bible says about what you should do tomorrow. And hopefully that will answer any questions you have about that. But again, make no doubt, a financial crisis is coming at some point. And when it does, central bank digital currency, I believe we just got a glimpse into the reason that's going to be stated for it rolling out, and how they're going to pitch it, and how they're going to end up implementing it. It's going to be following the next financial crisis. So what do you think? Leave your comments below. Let me know. Make sure to like and share this. God willing, I'll see you tomorrow. Bye. If you want to learn more about the end times and Bible prophecy, make sure to sign up for my free monthly newsletter and get your copy of my free ebook, 7 Signs of the End Times. Just follow the link in the description to get your free book. Also, make sure to check out all of my books. Just look up Britt on Amazon, Barnes & Noble, Apple iBooks, Google Books, Kobo, or anywhere books are sold. Thanks for watching today, and until next time, keep your eyes fixed on Jesus, the author and perfecter of our faith.